some bad times may end up resulting in much bigger wins, and you just really got to roll your sleeves up and stick with it. Some bad times may end up resulting in much bigger wins, and you just really got to roll your sleeves up and stick with it.
Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Jon Keidan, founder and managing partner at Torch Capital. Torch Capital is an early stage venture fund with a primary focus on how technology is changing consumer behavior and investing in mission-driven consumer technology companies. Jon, it's so exciting to have you on the show. I mean, not only have we had previous founders that you've invested in, but also companies you've worked on and different projects that you've been a part of. It's so exciting to actually have you on the show and go through a lot of those experiences, the stories behind those. But, obviously you've done a bunch of these, so I don't want to come out dry. And I want to bridge the gap for the audience, being that you have this interesting background coming from music and talent management and then entrepreneur to founder to VC. How has the experience of assessing talent from a music and artist standpoint, how has that influenced and impacted the ability to assess founders when you're investing in their companies?
Well, first of all, thanks for having me. It's really fun to be there and have these discussions. So yeah, I had a very circuitous path to venture, starting as a talent manager, as you said, in music, started in college. And basically the job of a manager in music is a little different than even an agent. You're really the partner of the artist. You find them early, you see a path for them, you share their vision, and you help them build it. And you really are a partner through good and bad, thick and thin. A manager, unlike an agent, is responsible for 100% of everything going on with their artist, versus an agent who's really just cutting your deals. And there are a few things that have really stuck with me through that. A, you've got to recognize talent early and pick the right ones because you're putting a lot of energy into it and a lot of time into it and resources. Two, it's really understanding what they're trying to do and why they're trying to do it so you can be as helpful in the right ways as possible. And then also you've got to be really comfortable with all the ups and downs, and often the hardest paths end up with the greatest results. And so nothing is ever simple and easy. And there are many stories in the music business with different artists who everyone passed on them and one took a chance and this happened and that happened. And by a miracle, they ended up becoming the biggest artists in the world. It was never a quick path. And so I think that's always in the back of our head, both for me and our team here, about when we work with founders, that you're really in it for the long haul. Some bad times may end up resulting in much bigger wins, and you just really got to roll your sleeves up and stick with it.
Yeah. When you think about the times when there's a missed opportunity, whether it's a missed investment or or an artist or founder feels that people missed or passed on their opportunity, is it a lot of times the fit between whether it's a manager, an artist, or opportunity and said founder, or is it some other variable that, whether it was preparedness or timing, are there other things that, allow, or that I guess come in the way of making those deals or transactions or investments or moving forward in a positive?
I think a lot of it's timing and fit, which are the two most subjective elements, have so much to do with it. It's got to be it's not that dissimilar from finding a significant other, right? Like you've got to be in the right mindset and the right time to receive and understand and feel each other out. But also there's certain things that I look for that I'm maybe attracted to that others may not be. And therefore I see something others don't, and vice versa. And so sometimes we definitely pass the course, unfortunately for us, some great companies, but we've also found some things before others did, or other areas where everyone passed and we saw something others didn't. So there's always a balance, but I think timing and fit, which is really chemistry, always play very heavily into it.
Yeah. And what kind of signals are you looking for in particular that signal that things will go in a strong direction? Is it the preparedness of the founder, their ambition, the way they communicate? What are these components?
All of it. I think determination, grit, passion, focus are just on both as an artist or, and that's the thing I think I really respond to. Yes, I have to get the creative vision, see the opportunity on both sides, but knowing, like having that really good sixth sense of someone who's got that inner strength and sort of is going to accomplish this in their soul. So how they're going to do it may be up for question, but they're going to do it. Being able to recognize that and plug into that is really key. And so all of those things, determination, grit, passion, focus are really critical. Preparation many people can be prepared that don't have the others, and they're not going to get through. But if you're not
Yeah.
prepared, you're definitely not getting through. But I feel anyone who has those four things is going to be prepared. They're going to be ready. They're going to have their best foot forward for what they can do at that point. And if they don't, then you can never want it more than they do. That was another big lesson. You can't want it more than the person you're representing in music, and you can't want it more than the person you're investing in or the team you're investing in. And so if they want it more than anyone, they'll have all those other things and preparedness and so on ready to go.
Yeah. Do things change when you're assessing, say, co-founder relationships when investing in companies? Do you prefer, is it better when somebody's at more of a leadership position, more front facing versus their counterpart is more on the behind the scenes and on the operations side? Do you look for those things, or do those impact decisions on investing when it's not just a solopreneur or solo founder, it's someone who it's two people or multiple people who share a vision? And how do you assess that when it seems like it would become a little bit more complicated?
Yeah, that's actually a key part of diligencing and really understanding a company and founders when they're multiple founders. What's driving them? Are their ambitions aligned? Are their perspectives on themselves aligned? Are their perspectives on their colleagues aligned? All those are really critical. I think, look, we have no rules. We back many solo entrepreneurs. We back 3-4 person teams. I mean, it really, there's no sort of perfect system, but I have found that when there's two people that really respect each other and are aligned, the ability to have an equal to bounce ideas off of and also to share responsibility is generally beneficial. The risk there is they can also at some point become unaligned and fight, and it's very destructive. But we've gotten pretty lucky. I mean, I think for the most parts, our founding teams have stayed very tight and have been like working together, and they work out this stuff ahead of time, what their skills are, what they want to be focused on. And once that's working in a complementary way, it scales really nicely.
Yeah.
But I also think when you see, when founders are finding out a lot about themselves as they're going through this process, and you never know. And so sometimes one founder thinks they want to be the inside person and they want to be the outside person. And so we're also really trying to really get in the mindset and understand what's important to them and what's important to them in the long term, to see if we can suss out if that they're aligned, that they mean it. They're not just saying it, but that really is there for the long haul.
Yeah. How much has the strategies and decision making changed in terms of the founders? I guess maybe even Toolbox, I would say, being that the external market has been changed so much, from crypto winter to challenges with SVB to so many other things that haven't really challenged companies in the recent years. Obviously, 2008 was brutal, and there was other events after that, but there's a lot going on for companies. And how much is their toolbox changed from what you've seen in your experience?
That's a great question. And we're getting back to what venture's supposed to be. I was with Ben Lair from Lair Ventures last night. We both started companies around the same time. And then he's been in venture a lot longer than I have, but we've both been around this world for a while. And this is what it is. It's hard. Venture is hard. It is very hard to build a company. And we're back from off. Unfortunately, it was a very quick slide that founders had to adapt to, of growth at all costs, easy capital, cheap capital. You made mistakes, you could paper it over by raising more money, or, you had a lot more flexibility to make mistakes, and your strategy was different. You're just trying to grow market share. And all of a sudden, screeching halt, stop the presses. Now forget about growth at all costs, survive, and get to profitability. I mean, it's a complete opposite headset, and very, very challenging for any founder, let alone young founders who haven't seen cycles before. So we luckily have been around for a minute. I've been investing since 2008 and been in the startup world directly as a founder since 2000. We're not a founder initially, but on a founding team since 2011. I've seen some of these things go through, and it's sort of like, okay, what do we need to do to help convince and make sure first the founders understand the current situation and reality, and then work with them to how are we going to adapt, or how are they going to be able to adapt, and us help them with, yes, you're going to have to cut costs. You're going to have to slow your burn. You're going to have to rethink your strategy. It's really, really tough. But I think the skill sets a good venture partner has is in many of these areas they're helping. It's not just, for us, it's not just rethinking their marketing plan. It's rethinking all their financials. It's rethinking their spend. It's rethinking their product roadmap. is rethinking their hiring. There's so many components that all play off each other. You can't just focus on one. And I think a good venture partner to a founder is really helping them think through all these things and all the pros and cons and results of these decisions, and helping them get to the right decisions that they need to make so they do get through a period like this. Because as things are much more challenging now, there will be more wind behind us, and those who survive this will obviously end up doing really well.
Yeah. One random question that popped into my head is thinking, obviously hindsight's 2020, but thinking about how a lot of companies had to readjust and move towards profitability, which means honestly taking down a lot of testing from different features and products, really just focusing on one singular profitable product. How often do you think a lot of founders, I don't want to say regretted, but just saw that they were investing time in really inefficient parts of growth for the business versus actually maintaining steady growth towards profitability and expanding on
A lot of regret, lots and lots of regret, enormous amounts of regret. And they see it themselves. We don't need to tell them that. So regret on having a lot of capital, not being as thoughtful that it could be ending soon, the ability to raise that capital. And so spending on things. I mean, if you'd said to most of these founders, you have 9 months of capital left to prove yourself, what would you do differently? They would have done a lot differently. They would have cut the science projects. They would have cut the experiments and the testing, and they've gotten down to the key, most important thing, which is focus. As Torch, we think about that too. What are we focused on? The sectors we're focused on, the stages we're focused on. I tell the team all the time, you only win by focus, and we tell our founders the same thing. And the good ones, they know this. So this has forced them to focus, but what it's enabled them to do is find much better profit margins in the process, create much more stable businesses in the process, and really build a strong foundation that will earn them the right, not they get to do it because they can, but earn them the right to go create new things and create new experiments off the core foundation of the business. But they have to find that they have a real business and that they have a foundation of people or customers that are coming back and consistently growing, even if it's not at the crazy growth rates it was before, but it's now stable. And again, you win by focus. And so the founders that have that regret all come back and they're like, we're focused. And they are, but there's a recalibration period and then a time wasting period. And so luckily our portfolio companies are through that now, but it's been a tough couple of years for everybody. A lot of midnight calls from not that different than managing artists, midnight calls from CEOs, panic discussions before a board meeting, before dealing with situations, dealing with employees. And look, these are sad situations. It's not just focusing and make a company successful. To do that, you're letting people whose livelihoods depend on you go, and it's necessary, but it's very emotionally taxing. And founders care about their employees, and there's a lot that goes into it to get that back to focused result. But once they get there, I think then they've got a much better chance, a really good chance of success.
Yeah. And when I think about focus in this adjustment period, I think about focusing on a singular product that has product market fit, has traction, has consumer feedback, maybe even narrowing down within that pool of consumers on some hyper consumer. And then I'm thinking about maybe readjusting my brand, changing my marketing channels to see what's being more effective. What am I missing here? Because there must be more to that formula when I think about refocusing. What am I missing?
So, I mean, you got a bunch of the areas. I think the first one is just really focusing on product. And then, well, I guess there are a couple of things. One, your existing consumers, you may be able to do more with them. Right now, one of the biggest issues facing companies is getting new consumers or customers is more expensive than it's been in a very long time. It's costing you a fortune. So there are two things that come into play. And again, this goes also back to the music business about really your audience and your fans and over delivering for them and making sure they're going to be on this journey with you. First thing is doubling down on your proposition for existing consumers. That's really critical. Like make sure that they're not on the fence about you, that they love you and you're doing the things to make them love you. The second thing is if they do love you, then you may be able to offer them some more things and you get it from feedback. You'll have very direct understanding of what the next couple of things you may be able to build for them. As long as it doesn't take the company in a different direction and you can build off that, you can increase your revenue per user in a real way. So I was saying the first thing is don't forget about your existing customers and consumers. They're such a critical part. You want to make sure they love you in times of uncertainty. You want to double down. And that's one of the most important things to think about is really bear hugging and over delivering for your existing customers. When you do that, they will also be more willing to go on a journey with you or buy more things from you, or create opportunities to cross sell and upsell and increase revenue, but also value for them and revenue for you. But they have to be, you can't take them out of the equation. You can't just say, we're going to raise prices or something. That won't work. So that they have to feel extra value, but you could probably get paid more for it. And so when acquisition costs are so expensive as they currently are, that's one very important strategy. And there are a number of our businesses that have done that brilliantly. Acorns is one. They are always thinking about the end consumer. Noah and Jeff built an incredible brand, even with the market volatility. I know you've spoken to Noah.
Yeah.
And the market volatility, the retention is through the roof. People trust them. They love them. And that's because they very thoughtfully, every decision they made, say, how is this going to help our consumer? So once you do that, that's really key. And then you have to start very carefully experimenting with who else you could be talking to, who else could be a natural fit for you as you get new consumers. Because just spending money for marketing is not going to work in this environment. It's way too expensive.
Yeah.
And so I guess one main thing I would add is just be very, very focused on who your audience is and on over delivery to them.
Yeah. And one thing that has come about that I've seen with a lot of companies is this interesting brand repositioning. And I don't know if it's by influence of Web3, getting a really close relation, becoming like kind of really closely related to their customers, building community and focusing on that. I think a lot of companies are being influenced by that. But when you think about like brand repositioning, where does your head go in terms of the story you're trying to devise? Are you still thinking about how you're approaching your customer? Say if you're trying to regain traction, you're trying to increase some momentum. How do you go about that process and realigning with whether it's your customer or brand when you do go through like a brand transition?
So again, core to Torch, you're always thinking about brand, and brand for us really equates to trust. A good brand creates trust with consumers, create loyal customers, and so on. So you only need to go to a brand refresh if you're trying to change your messaging or you have feedback that you need to approach something in a different way. Maybe your value proposition wasn't strong enough. Maybe you're focused on the wrong things of how people's needs have changed in this environment versus 2 years ago. So the thing to first, again, think about, it goes back to focusing on your core consumer and your core value proposition. Why are they customers of you? What do they want from you? And then can you frame, and where is their mindset today? And can you frame that better? And I think it really starts coming with the messaging of the value proposition of the number one thing that they like and want from you and what they need. And then you can move from there, but you've got to nail that. And then in terms of sort of the more fun elements is just sort of design and sort of the UX side. I mean, I think again, you're looking at it's a mix of art and science. Venture is such a core, early stage, it's such a core mix of art and science. Some of it's feel and some of it's data. And those who are really able to balance the two, understand data, but have perspective, like Steve Jobs did. He even say, customers don't know what they want until you show it to them. So you have to understand both sides, leading them, but also taking their opinions and perspectives into account.
Yeah. Yeah. Thinking about the traction, obviously you've been at this for a while and you've invested in some amazing companies so far. What do the next generation of companies that you're looking at look like? The next FANG companies that are out there who are really delivering value and have a unique value proposition, maybe have some great timing, have a unique piece of technology that that is fairly productive or substantial in a certain area. What do those next companies look like to you or look like today?
One of the areas we're really excited about is the fastest growing part of the U.S. economy are small businesses, which includes solopreneurs and freelancers and gig economy, people's side hustles turning into their main hustles. And it's never been easier to start one of these businesses. And so there are a couple of really interesting characteristics of this consumer base. We think of them as consumers building businesses, not enterprises. And that's a really key distinction, because they're really someone who's doing something that they like doing or are good at it and make money from it. They're not looking to build like a massive business of it day one, or they don't know how to do that. And so the tools they need, the simplicity resembles a lot more like consumer tech products and tools than traditional enterprise. And also they need a lot of help in just figuring out, they don't know what they don't know. So all of a sudden you start a yoga studio, you're doing it on the side, you start a proper yoga studio, you build a website. We have a company, Durable, that's just focused on bringing people, new business founders from 0 to 1. Service businesses, could be a lawn mowing business, it could be selling something online, but all the different elements, they take you through them to get you up and running and then help you manage your business. It's like a one-stop shop. And they also use generative AI. And so AI is going to be a major factor, especially for this audience, because it will enable them to do things more quickly and cheaply than they could before. But you still have to be delivering on a core value proposition of a pain point you're solving for. And then AI helps you do that. It's not just invest in AI. So this company, Durable, is fantastic. The key thing that they use AI for was just building websites in under 10 seconds. They can build you a beautiful custom website that takes payments and tracks your customers in 10 seconds. So that all of a sudden, that's something tangible. People understand. They feel, okay, wow, I actually have a place I can send people to now, and I can start marketing and so on. But then they'll help you continue through that journey. So that's a whole segment. And Durable is just one example of a company that's really serving, again, it's the fastest growing part of the US economy. It's going to be massive, massive value creation for people's income, for generating new businesses and so on. So we really love that space because it's the perfect mix of business and consumer.
Yeah. It's interesting. And I'm curious to hear your perspective on this. We've had a lot of companies who work within the space offering so many different types of tools, whether it's helping on the accounting part of a business or customer acquisition or operations or bringing them into a social media or not social media, a mobile application. And one of the common factors, it seems as though there's this kind of a ceiling to the budget that a lot of these businesses have. So they really focus on new customer acquisition. And we talked about how, much more competitive that is now, being that so many channels are just conflated with paper ads. I mean, there's so much competition out there. How do you then get those customers if you can't get them at the regular challenge, in those kind of usual challenges that they visit, if you're an up and coming startup, like the budget?
So, yeah, you've got to be creative. This again, art and science, creativity, it all really has a huge impact. There are so many ways to market to people. When I started in the music business, there were a huge grassroots marketing, street teams, they were called. They were on college campuses. They were delivering flyers. They were hosting parties. It was literally hand-to-hand combat, and they would convince you in person like that. There's community marketing. There's content marketing. My last company, Inside Hope, was a digital media company and in the top destinations for lifestyle recommendations for guys over 30. We did all sorts of different types of marketing with our brands, for ourselves. Product-led marketing is another huge one. One of my early investments was DigitalOcean, which is now public. They were creating cloud, like a much simplified way to get your cloud infrastructure up and running for individuals and hackers, and actually for small businesses and for engineers and so on. They did product-led marketing, community marketing. They know where those people were gathering, and they would get in front of them and had a very good understanding of their mindset and what they'd be interested in. And then they sort of jumped in that flow. They never had an enterprise sales team until they went public or right before they went public. So there's so many other ways to do this. Like I said, from literally handing out flyers and creating events to PR and press to community marketing, content marketing, product marketing. There are just many other ways than social media marketing, which I think everyone became too comfortable with and just created a lot of noise, and it made it very expensive. Even media. I mean, you can go get radio buys in some of the less populated parts of America very, very cheaply, probably way more cheaply than it would cost to do social media. And they can be very effective. You have to understand, again, who your audience is and what the value proposition is there. But there are so many ways that people haven't thought of, and maybe I've been an advantage because I came from the media and entertainment world my whole career. But to me, there's infinite ways to do it. You just have to get clever, creative, and be looking way beyond what the most obvious opportunities are.
Is there some recent strategies that have surprised you on how effective they are?
It's so funny because everything is so expensive. It's going back down to that grassroots marketing. There's a company we're looking at in London. And one of the founders is the ops guy, and he's got all the numbers. And the other one is much more the creative marketing guy. And he was just talking about he's going to do some really fun things, like color a little truck, and he's going to go around neighborhoods. And I'm just like, geez, we're back in like hip hop marketing with like, what Wu-Tang used to do, or
Wu-Tang
mixtapes and blonding mixtapes and so on. So the more you go forward, the more things stay the same. So that was pretty creative when I was like, wow, I haven't heard about that sort of marketing in a long time.
Yeah. Do you think is it just people finding a better way to connect with their consumers and they build that
Yeah,
trust and
it's connection.
just wherever that trust is going to go, right? Yeah.
But connection is really critical. Like, where are you genuinely going to connect? I mean, I used to work with
Yeah.
Dave Matthews, and one of the key insights that they very strategically had in front of them was that we're a band. We're not celebrities. We're not rock stars. We're not in this to do this. We're in this to be musicians and play music and share that connection with our audience. And so, I don't know, 25 years later, they're still selling out arenas every single year. Doesn't matter if they have a
Yeah.
hit song, doesn't matter if they're on the cover of a magazine, doesn't matter if they're dating someone famous. They don't care about that stuff. It's not ever what they thought about. Their focus was on that connectivity with their audience. And everything
Yeah.
else was like nice to have. That was their must have. And it's given them enormous longevity and success. And so
Yeah.
I think it's just, again, back to focusing on your end consumer and the connectivity, understanding their mindset and figuring out where they
Mhm.
are and meeting them there.
Yeah. And also it sounds like in addition to that, just knowing what your superpowers are or your value or what your abilities are. It sounds like for them, they knew so well about who they were as artists, how they connected already with their audience that it didn't make sense to change because it was working. It just may have not been on a similar timeline or conventional. It's so interesting to think about how those situations come about. And
And
oh, go
more
ahead.
credit, because
Mm,
when they were that became their strategy. It was at a time in the earliest 2000s when every other artist was on magazines and
yeah.
celebrities and rock stars. The whole rock star thing is cool to be like a very flamboyant rock star. It was so differentiated at that point. I think Dave Matthews and Pearl Jam were the two that really just sort of like shut that out and just focused on like what they loved, knowing who they were and so on. But everyone else was
Mm,
very wrapped up in that. And so it wasn't just like completely, it was organic. They already were there, but they were smart enough and aware enough to recognize this special relationship that they had and that was the most important thing. And the rest of it didn't really matter. And again, they're phenomenal guys and that's who they are as people as well. But they easily could have been, let's try to get the next single right and this and that. And they're like, no, no, no.
right.
We play music. We play it for our fans. We want to make them feel that we love them and that they love us. And that's what's important. And that connectivity is the key.
Yeah. Yeah. Being that not even just now, I think over time, there's always been just external, whether it's distractions or variables that challenge businesses. What do you feel like is some of the biggest challenges that founders will have to face today outside of obviously a different funding market, outside of the kind of the things we've heard in the popular, in the news? What are some things that you think will challenge them more in the near future?
So this is a really hard time to build a business.
Yeah.
If you're not best of the best, it's going to be very, very hard to succeed. There's no room for mediocrity here. Capital's part of that. I think there's a lot of burnout just in the industry. And I think there's a lot of noise just in terms of getting customers, consumers, et cetera. Everything is sort of working against the founder right now, which means a couple things. We like this environment. We love this environment. This means founders that we're seeing are much more focused. Again, back to focus. They had enormous passion because no one's going to do this for fun. It's like, maybe it'd be fun to start a company right now. It's not happening right now. They're going to get scar tissue much faster because they're going to really have to fight for every win that they have. And
Yeah.
they're going to have to be very realistic. And that's where capital has multiple effects. It's not just you have money. It's if you raise less money, you have less money to prove yourself, which means you have less time, which means again, you just have to get to the core thing and you can't really mess around with anything else. You have to make good hires. If you make a mistake hiring, you can't afford to keep that person. It just forces everyone's hands where everyone had all this room to be loose before. And that tightness does a few things. A, it gets you closer and quicker to see if you have product market fit. If you do, the path to getting there has already started to influence your thinking of seeing what made you successful doing that. And you'll continue doing that, which is again, being disciplined, being aware of what are the key areas that that you have to prove out for the next step and just be going methodically through it. And then also the magic side, you've got to create some buzz and magic around what you're doing. Again, to get your first customer, to get your early consumer base, to get to hire people in this environment that knowing how much risk there is, you've got to have that magic. And so for us, the next 2 years, I think are going to be a phenomenal vintage because founders that can both harness the intensity of the current environment and able to focus that like a laser. At the same time, influence and inspire people to come join them on this very, very challenging journey. A founder that has they can do all that is going to have a really good shot at success.
Yeah. And thinking about yourself, being that a lot of early stage venture companies, the first measure of success is, can I build a hyper scalable or be a part of a hyper scalable company? And you've done so already. So being that that box is checked off, how do you measure success now? Is it the types of technology you're helping build? Is it the amount of impact? How do you measure impact? What is it? What do you focus on in terms of long-term vision?
That's a good question. Definitely, it's helping founders build something that moves the needle for people. We focus on the consumer ecosystem. It's both consumer facing companies, but also the tech platforms and infrastructure below it. And if we can help companies that are using technology create better customer consumer experiences, that's a win. I mean, some of our favorite companies, I mentioned Acorns, Roman, incredible telemedicine company, making medical care, different conditions of treating simpler, easier, cheaper, more convenient at scale. We have Tia, women's healthcare company that Nicola the seed and has been very involved with all the way through, one of the fastest growing women's healthcare companies in the country. They're rethinking how the relationship between women and healthcare, and they can offer gynecology and primary care and mental health and help with fertility and wellness all in one place and in a much more impactful way. One example for them, just to show how powerful these companies can be. They opened their Williamsburg location and 800 women signed up the first week. This isn't the new like Taylor Swift tickets on sale. 800 women signing up for healthcare in a week.
Those are physical signups. Those are not like views. Those are not.
No, those are women literally signing up to be a member and setting an appointment with the clinic. So that just shows how powerful. Most pain point here, Katie on my team and I work closely on this deal, but what she taught me was just women have a very challenging time in the healthcare system. And there are many, many reasons for that. And Carol and Felicity, the founders of Tia, brilliant, really recognize that. And they sort of wipe the slate, say, what is the perfect experience that we could imagine and how can we create that? And so I think they have 30,000 members now in New York, LA, San Francisco, and Arizona. I mean, it's growing like this. But again, it shows they had a very strong value proposition that they could over deliver for their consumers. They had phenomenal branding that like fit the mindset of who they were speaking to and made them feel that connectivity. They delivered amazing experiences to the women that come in as patients, to the point where the patients are and the members are the evangelists. I mean, all the things I've been talking about on this podcast, all are in play. And you see when all those things work cohesively together, you get a massive company. And it's companies like that that make what we do really rewarding, because you can watch from scratch the impact that these founders and these companies are creating. And that's definitely why we do this and what we love about it.
Yeah. Yeah. I love that. I love this next section as well. I call it my founder FAQ. So obviously we'll remix it up since you've been a founder, you've been a managing partner, you've worked so closely. So, but I'd still like to ask you some rapid fire questions and see where we get. So
sure. Let's do it.
First question I always open it up with is, what's particularly hard about your job day to day?
Drinking from a fire hose times 1,000. The amount of people for what we do that you have to be interfacing with all the time, it's insane. It's exhausting. So you gotta have a lot of energy for this job. I love it. It's never boring and you meet fascinating people, but think about it. You're meeting new founders. You're meeting your existing founders. You're also talking to your LPs and the investors in the fund. You've got other executives and other funds that you're chatting with that you have to be constantly in touch with. And there's your own team. I mean, there's just so many stakeholders to make work what works. And so the hardest part by far is there's not enough time in the day to see and touch all the people and things that you want to do. So you have to be it's very tough to manage all that and to triage all that.
Yeah. Another question I had was, is it more challenging to assess a new founder or a founder who's had not a necessarily successful pedigree based on prior businesses that they run? Who's harder to assess?
I'd say a new founder's harder to assess because a founder, even if they're a founder who had a company that's failed, there's a lot of experiences that you can probe into and you can understand by their answers how they think and how they're thinking and how they react to certain situations. A new founder is just much more unproven. I mean, if they had held jobs somewhere, One of the things I was joking with another VC about was there are people you can reference check and they have a terrible reference at whatever company they were at. But then if you actually scratch the surface, that's what's going to make them a great founder. They were opinionated. They didn't listen to this. They did their own thing. So they could get a bad reference, but they could be an amazing founder. So it's very hard to balance those two things because it's not just like box checking at all. And that's again where the art comes in. So it's definitely more challenging to assess a new founder how they're going to interpret and be able to handle all the crazy roller coaster situations they're going to be encountering and getting to understand if they're going to really be able to persevere through that.
Yeah. When is VC investment not a good move for a company?
I think you have to be really realistic as a founder. Is this truly a scalable business? And it's something we're all often thinking about. If you can have a very profitable, nicely growing, we would call a lifestyle business. That's a great business, but is venture investment going to be able to grow exponentially? That's really the key thing. Now, if you require a big engineering team from the onset, then the answer is you don't have any other. Yes, of course, it's your only option, but hopefully the big engineering team, you're doing something that can create exponential growth. Mm-hmm. But if you're creating something that's much more linear growth, I think it's a really good question. Do you need venture investing? Can you do it through debt? Can you do it through, the music business where I was trained and came up as a manager, you get a piece of your artist. So if you don't get your artist signed, you don't have any money to build a company with. And so I got my first artist signed. I took that money and I started the company and then got another artist signed and you get them another deal. And you really eat what you kill, which is the way business has traditionally been built. That's still a great way to create a business. But if you think the extra capital will help you exponentially grow a business, and that generally is a big business at scale, then venture makes sense.
What are just some of the best practices when you're a founder thinking about deploying capital?
So I think it's really important to have a clear plan that's pressure tested and realistic. Plans change. We know that. They know that. Any early stage venture person knows that. But at least once you have a plan, you can react to it, and you can react to the changes in the environment off a core basis, so you're not floating in space. So it's really critical to have a plan, not just of what you think as a founder, but getting other founders' input and your investors' input, if they've had experience in this, to really all agree on this plan. And everyone knows this could completely change, but that starting point is critical because then you could see where things are deviating and where you want to allocate resources to differently. So yeah, the more specific, the better. And again, everyone knows this is going to change, but if you don't know your starting place, you don't know where you're going. And so you've got to start with that starting place.
Yeah. Yeah. Thinking about your career and what's been impactful in your life, whether it's a book or a person, what's had a lasting impact that even today you reference and even advise other founders and share the wisdom? Anything you could share with us and our audience today? Any books or people who've inspired you and left something?
Oh, wow. Well, I'll definitely mention Jack Welch because I got to work for him. His book, Winning, there are some core fundamental aspects of building any business that are incredible. And he's gotten beaten up on the press for some being a public company CEO and so on. But his core thesis on how you conduct business is incredible. And some of the key things include sharing a vision and each bricklayer, you talk about the chapel, each bricklayer needs to know that they're pushing each brick to build a chapel. Like, how do you get buy-in? How do you get people to share your vision? How do you share successes with the team? How do you make sure everyone feels that they're developing on their career path and balancing all these things? He's the best at that. So that book, Winning, was phenomenal. I had a professor at business school that sort of took those theses and even took them further. Michael Finer Points of Leadership was a really great book. I learned a ton on the music business. That's a gangster industry. That's the opposite of tech in many ways. It's all deals and relationships and influence. So I learned a ton there, but I also I got a lot of lessons from some really terrific people. I mentioned Dave Matthews and their manager, Corin Capshaw. I think there are Thor Cohen, who built Def Jam and then ran Island, CEO of Warner Music. He's seen it all. He signed Jay-Z and Kanye. And now that he's global head of global music at YouTube, but getting his perspective now, he's out of the core music business, the rough and tumble gangster side. He's not in that anymore. Learned so much from him about where to be aggressive and where not to be aggressive, and to think about the bigger picture and really treat people well. Even you should be able to always find common ground, which he would admittedly say he didn't do back in the day, but now he wishes he did. And that's how he runs his life now. There's a lot of colorful people who I've learned from, but those are a couple of them.
Amazing, John. I know we're at the end of the episode. It's been such a pleasure talking about your experience, your background, what you've learned, what other advice you would give founders, and how you really see a lot of different trends, even currently now, that will be exciting for us to see how they will play out. But last little bit, I always like to ask, is there any question we didn't cover, anything I didn't ask you that I should have, anything left on the table here today?
Oh, wow, we've gone through a lot.
We could go through more though. It's a wealth of stuff. Yeah, anything that you wanted to touch on before we end it today?
I think you mentioned a lot of things. I mean, I think, look, everyone's always is talking about the hype of AI, and that's one thing I'm happy to chat a little bit about, our perspective on that. AI is revolutionary. We are still very, very, very early. And Google wasn't the first search engine. It wasn't the third search engine. It was like, I don't know, the 15th or 20th or so. It was way beyond. And so I think we're still a bit of a ways of real commercialization on it. We're just seeing the tip of the iceberg. And so at least for Torch, we're being much more thoughtful. We're looking at where's that real commercialization going to happen. And we're looking for companies solving pain points, and AI can maybe help them do that, like Durable, we have a few other companies. But I think just people should keep in mind, founders should keep in mind, unless you've been doing AI for 3, 4, 5 or more years, just as you saw with Web3 and crypto, it's not all equal. It's not one industry. It's a means to an end and can impact a lot of industries and will impact a lot of industries. But just because you stick AI on it or say you're using AI is not necessarily something that will get us excited. We still want to understand what pain point are you solving from who, why, and if AI is a huge capability enhancer, accelerator to that, amazing. But then we're going to want to know how.
Yeah.
But I just think it's, you're hearing it on every list of everything that's going on out there, and every fund is talking about it. And it's, the hype is real from the perspective in the long term. This is going to change everything, but we're not there, and we're not there tomorrow. So we're very thoughtful about that.
Yeah. It's funny. A lot of these businesses are really, really well run and have great value props, but it is pretty funny how a lot of companies have been doing AI before it was cool. They're like, oh, we've been in AI since 2012. And I was like, I don't, the journey doesn't really make sense, but okay, sure. And we'll still go through. But no, it's interesting and exciting where that's going to have an impact and how it's powerful as a tool. But John, I've taken enough of your time. I won't take any more. Thank you so much for being on the show today. Last little bit is, where can we find and support you and the things you have to say? What are your LinkedIns, Twitters, wherever we can find you and hear your voice? Please share with the audience.
Sure. Our LinkedIn, my LinkedIn is, my name, Jon Keidan. Find me on Twitter. I think it's Keidan J. And then we have Torch on Twitter and on Instagram. And we're out there, and more, rather than us spending our time putting things out in the ether, we're much more focused on what we're doing. So we're always willing. It's easy places to contact us, or on our website is probably the best, which is torchcapital.vc.
Amazing. John, thank you so much for your time. I hope you enjoyed yourself.
Cheers.